What makes you happy in the office?
Okay, it would be when a new bunch of articles have joined and there are girls among them.
This is a professional event. Don't just be professional, behave professional.
Okay, so coming to professionalism, then it would be after extracting trial balance, we reclassify and classify the ledgers, then we prepare the subschedules, then we go on to the schedules, and after doing all this, the happiest moment would be when the total of assets is equaling with the total of liabilities. That gives the joy, that is the moment.
I totally agree. Balance sheet has one key assumption that an entity will be a going concern. For it to keep going, one of the most crucial aspects is the revenue it will be earning.
For me personally, revenue recognition has always been a slightly confusing topic. Could you help me with something?
Worry no more, Aditya. The first paper presenter of the session is on the topic revenue recognition itself.
Okay, I have few doubts in other sessions as well. Can you do some jugaad for that?
Don't tell me the whole AS is a doubt for you now.
Okay, no, but I have only two more tricky aspects. One would be borrowing cost. Could you help me?
Yes, the second session would be on the borrowing cost.
The third doubt would be PPE. When I mean that, it is Pavana's property and earnings.
Sorry, you wouldn't get that.
Okay, so how about PPE for property, plant and equipment, along with some intangible assets clarification as well?
Tatastu, granted.
Thank you. So without further ado, we request CA Tupat sir to escort CA Vinay Pai and paper presenters of this session onto the dais. Profile.
May we now request sir to welcome them with a bouquet.
Thank you, sir. Before we begin the session, let us know more about the chairman of this session, CA Vinay Pai.
Vinay Pai is a fellow member of the Institute of Chartered Accountants of India and associate member of the Institute of Cost Accountants of India. He also holds a diploma in IFRS from ACCA. A consultant and trainer for the last 12 years, he specializes in IFRS and US GAAP. In his previous corporate stint, he has 15 years corporate experience at Infosys as Vice President Finance. He led its US GAAP conversion in 1999 and IFRS implementation in 2007. He has authored over 500 articles on IFRS, US GAAP, INDAS, published in various publications. He is a core group member of the Bombay Chartered Accountants Society and convener, member of the editorial board of the Bombay Chartered Accountant Journal Committee. He contributes a monthly feature on financial reporting and assurance to the Karnataka State Chartered Accountants Association monthly newsletter. He also authors a bi-monthly financial reporting dossier feature published in the Bombay Chartered Accountant Journal. His financial reporting dossier feature was presented the Best Feature Award by the Bombay Chartered Accountants Society in 2021. He has presented papers at over 100 conferences and seminars. As a cartoonist, since the last 6 years, he has been contributing an average of 5 cartoons a month that are published in the Bombay Chartered Accountant Journal. Ladies and gentlemen, CA Vinay Pai. CA Vinay Pai is a fellow member of...
Thank you. The timings allotted to each presenter is 15 minutes. Strict adherence to the timings is appreciated.
May we now request CA Vinay Pai, the chairman of the session, to address the gathering and set the context for the session.
ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. ಗುಡ್ ಆಫ್ಟರ್ನೂನ್. It's my pleasure to be part of this conference, and at the outset I will thank ICAI, SIRC, the students, SICASA, and all the entire leadership of ICAI and Kavita for granting me this opportunity. I am aware that we are slightly running short of time, and therefore, let me set the expectation straight. I will provide my opening remarks in around, say, 10 minutes. Each of the student speakers will have 15 minutes. Any questions with respect to their presentations, we'll take it up at the end of the third presentation. So we'll patiently hear the three speakers because they have put in a lot of effort in bringing this to you. And at the end, I will again come between you and lunch to provide some closing remarks. Is that fine? Yeah, you are saying yes because there's no choice also. Now, this session, it has, the session is balancing the balance sheet. And the compeers also, I heard them mentioning, the thrill is when you see the assets equaling liabilities. Just in a lighter vein, when the assets equals liabilities, you have a problem. There's no net worth in the business. Okay, that's just on a lighter note. Now, I will just take 10 minutes or so as the opening remarks. Understanding the balance sheet is the theme of this session. Balancing the balance sheet. And of course, the term is, there is a play of the word balancing and balance. However, we do understand that the balance sheet which is being referred to in the theme not only covers the balance sheet, but the way we understand an entire set of financial statements, annual report, and what is increasingly becoming mainstream, sustainability and integrated reporting. Coming to balancing, of course, the arithmetical equation will always balance. It's not, when I was your age and all the manual accounting had to be done, sometimes, or rather most of the times, the trial balance will not match, and then you park it in a suspense account, and the suspense account remains a suspense for long. What do we exactly understand by balancing? Let me park that for a minute and then move on to, and then, some other recent point, developments or, something in the news which I want to talk about, and then come back to the balancing part. A couple of days back, a report was tabled in Parliament. All scheduled commercial banks in the last 5 financial years, financial year 2018 to financial year 2022, they had to write off 10.09 lakh crores of rupees as NPAs. and the recovery through the various mechanisms that are available, which you are aware of, like the Surface Act or IBC or the provisions of various enabling resolutions or, regulations, have yielded only 13%, which is something like 1.09 lakh crores of rupees recovery in comparison to a write-off of 10.90 lakh. Now, what has this got to do with the subject on hand? Lenders are one of the primary users for whom accounting standards are meant for. Next, let me look, I'm only talking about information which is in the public domain. The second point, I think it is being covered by one of the speakers who is going to present on revenue recognition, because I just had a glance at it. I will not be naming the company. It's been in the news for certain revenue recognition practices. The revenue should be recognized at point X or point Y, or between point X and point Y is what we hear in the news. I'm not privy to any, internal information, and I would therefore refrain from commenting, except in some closing remarks in the context of 115 Ind AS or AS9. And also there is another sort of, high profile case where payments have been made to related parties, non-existent vendors, so on and so forth. Something to do with financial reporting and the internal controls behind that underlie them. These may be just some outlier examples. Point number 3, let me look across the globe and some recent developments with respect to these financial misstatements itself. The US Securities Exchange Commission, the US SEC, which is a capital market regulator in the largest capital market in the world, the United States, earlier this month, they came out with their report for fiscal 2022. We are at the end of the calendar year, and they have reported that the total amount of penalties and disgorgements collected by the US in one calendar year is at a record $6.4 billion. Look at, and of course, not all of that is relating to financial statement related or auditor related, misadventures. 6.4 is a record in the history, and the SEC chairman also said we would not like to have this kind of penalties being collected on an annual basis. We hope for more compliance. Whether you look at the Public Company Accounting Oversight Board findings, the inspection reports, you will find humongous instances of these. The balance sheet balances, but there are other issues that are surrounding it. And last year, or rather this year, which is just going to end, which is their fiscal 22, there has been a the largest single amount of penalty on an audit firm by the US SEC. And I'll just take one last example, because it is related to one of the topics being covered by one of our speakers here. Borrowing costs. Something, what you call as a accounting related guideline has come from the National Financial Reporting Authority. I'm sure most of you, you would be aware of it, in the last 30 days, where based on one of the findings from a, financial statement inquiry or inspection or whatever you term it. Going back to the first point of these NPAs, the said company did not account for interest taking shelter under the provisions of Ind AS 109. It's not a shelter actually. It's an interpretation issue where although there is no one-time settlement with respect to its borrowings with the counterparty, which is the lending institution, the bank, the said company, the reporting entity, did not recognize interest because the banker has treated as an NPA and therefore we will not account for the interest cost. Ind AS 109 doesn't permit you to do that. And then the arguments put forward in support of why it was done, it's sort of very puzzling, if I have to use a light word. And then related, apart from the penalizing which happened for the company and the auditor, NFRA has come out with a circular which says that whether it's the preparers or the auditors, they need to ensure that 109 financial instruments need to be complied with, unless there is and they did not say it, everybody knows that. And that's the disturbing part. Why should a regulator say that this is a practice which you have seen widely across companies? Non-recognition of interest costs. So now, coming back to balancing the balance sheet. There is no balancing that is desired. I'm not talking about the arithmetic part. Balancing is neither the requirement of this any accounting framework, whether you take US GAAP, IFRS or various standards that are prevalent, including our mandated Ind AS or AS. Balancing is not a requirement. What exactly do I mean that? Balancing means, one of the presentations where there is a pitch for the investment, there was a promise of, there will be stable revenue streams. Stability should be a natural consequences. You cannot use accounting to provide that stability. That's what we mean by, you cannot balance. You can neither be aggressive nor conservative, saying that we will save something for the rainy day. There's nothing like long-term versus short-term. There is no balancing the interest, requirement of balancing the interest between various information, users. What is balancing the balance sheet? You have to say things the way they are. The balance sheet, the financial statements, what you read is what you get, what you see is what you get. Truthfulness, representational faithfulness, materiality, which is one of the bedrocks of financial reporting, providing information in a manner which represents faithfully the underlying transactions, that is balancing. Now, without taking more time, we'll now get on straight to the presentations. And I invite the first speaker, Apeksha Pai, to the dais.
Cord mic. Cord mic.
Thank you.
Thank you, sir.
We now have with us Apeksha Pai, who will be the first paper presenter of this session. She is an aspiring CA, a trained Bharatanatyam dancer, and a passionate artist from Bengaluru. She is a CA intermediate student who gave her attempt in November 2022. I now request Apeksha to take over the session.
Hello, am I audible to everybody? Friends, my father always told me that in order to know the true value of money, I need to first borrow some. Why? Because one day I'll understand the pain to repay that money back and bear the cost of borrowing. I emphasize on the term cost of borrowing. Yellaregu namaskara. Good morning to one and all present here. I am Apeksha Pai and I am here to present a top paper presentation on 2 accounting standards that will help you balance your balance sheet. So honestly answer to me, which of you have skipped accounting standards for your CA exams partially or completely? Raise your hands. Okay, to the ones who are not raising your hands, you're either ultra pro legends or you're a bunch of liars, okay? So here in this session, we'll all be covering, headed by Vinayak sir, we'll all be covering 4 important accounting standards that will help you balance your balance sheet. My first topic, my first accounting standard that I'll be covering today is cost of borrowing, which is nothing but A16 borrowing costs. Borrowing costs means interest or other costs incurred by an enterprise in connection with borrowing of funds. Borrowing costs include, sorry for the delay. Borrowing costs includes interest and other commitment charges relating to long-term and short-term borrowings, amortization of discounts and premium relating to borrowings, amortization of ancillary costs relating to borrowings, finance charges in respect of assets acquired under finance lease, exchange differences to the extent they are treated as an adjustment to the interest cost. The entire crux of this accounting standard is to decide this, what is on the slide behind me, whether borrowing costs should be capitalized along with the assets or be treated as an expense in the P&L statement. The basis for this I'll be discussing further. As per AS16, borrowing costs that are directly attributable to the acquisition, construction or production of qualifying assets should be capitalized along with the assets. All other borrowing costs should be treated as an expense in the P&L account. So what are qualifying assets? Qualifying assets are those assets that necessarily take a substantial period of time to get ready for intended use or for sale. Here, substantial period is generally a period of 12 months, but a shorter or longer duration might be considered if justified by the enterprise and based on the facts and circumstances of the case. To understand the meaning of qualifying assets, let's look at a few examples. Example 1, ABC Limited borrowed funds for the acquisition of a BMW car. Now, in this case, a BMW car is not a qualifying asset. Why? Because it does not take a substantial period of time to get ready for use. Imagine if you or me bought a BMW. What would we do? You'd go on long drives, you'd probably take selfies, and maybe even show it off to our friends, right? So we'll do that immediately after purchase. So in this case, the borrowing cost in the acquisition of the BMW car will be treated as an expense in the P&L accounts. Example 2, so as we all know, in October 2022, Adani Group acquired the 5G license in India in order to establish a 5G wireless network and offer full-fledged telecom services in India. In this case, the 5G license should be treated as a qualifying asset because it takes a substantial period of time for the 5G network to be established. In this case, the borrowing costs on the acquisition of the 5G license should be capitalized until the network is ready for its intended use. As sir was talking about earlier, what is the principle behind AS16? Why do we do what we do? The principle behind AS16 is simple. So we are all familiar with the historical cost of an asset. The historical cost of an asset is an inclusion of all the costs that are necessary necessarily incurred to bring the asset to its necessary condition and location for its intended use. In this case, the borrowing cost, which is actually the cost of financing the expenditures on the asset, should be treated as a part of the historical cost. Hence, the borrowing cost on only the qualifying asset should be capitalized along with the asset. Commencement of capitalization. Capitalization of borrowing cost is said to be commenced when three conditions are fulfilled. Condition 1, expenditure on qualifying asset are being incurred and borrowing costs are being incurred and activities that are essential to prepare the asset for its intended use or sale are in progress. Suspension of capitalization. So capitalization of borrowing cost is said to be suspended during the extended period when there is no active development or active development in the qualifying assets have been interrupted. But we need to keep in mind that there will not be any suspension of capitalization in case that the delay is necessary part of making the qualifying asset necessary for its intended use or sale. My fellow Bengalurians here will agree to me when I say that the rains in Bengaluru are so very unpredictable. Yet another thing that is unpredictable are the fights, riots, strikes happening anytime, anywhere by anybody. Such is the case in this example here. When Aditya Developers was constructing a building, a labor strike of 15 days stopped the constructions for about the same period of 15 days. In this case, since there is no active development and this delay is not necessarily required for the completion of the qualifying asset, in this case, the interest incurred during the delayed period of 15 days should be charged as an expense to P&L account. Okay, so we talked about commencement, a temporary delay, suspension. Now let's talk about when to cease or stop capitalization on borrowing costs. So the capitalization of borrowing costs is said to be ceased when all the activities that are necessary to prepare the qualifying assets are complete. To understand the second point that is given on this slide, let's look at an example. Ambuja Cements Limited is constructing a cement plant involving three processes. One of the processes is complete by 31st March 2023. The cement plant can be ready to use only when the construction of all the three processes are complete. In this case, even though one process is complete, the cement plant cannot be ready to use until the completion of all the processes. So in this case, the interest portion of only the completed process should be capitalized until the network is ready, until the cement plant is ready for use. Until now, I was doing all the talking. I don't need a break now. So now it's the chance of all the future chartered accountants sitting in front of me in the audience. I'll be asking you all a few questions, a few two questions, which you'll have to answer in yes or no. Yes should be capitalized in this case, or no should not be capitalized in this case. So let's go. Choto-moto question number 1. When FPCC Limited was constructing a bridge on Sharavati River in Karnataka, the construction was generally stopped when the water crossed a certain level. So in this case, should the company capitalize the interest cost during the delayed period? Yes or no? So the correct answer is yes. Great job. Okay. So the next Choto-moto question is, should interest on working capital be capitalized as per AS 16? Yes or no? Okay. So the correct answer is no, because I revealed the next answer, but hopefully nobody saw it. Okay, so as per AS 16, working capital will not be a qualifying asset. So in this case, the interest on working capital should not be capitalized. The correct answer is no. Next question, should interest cost of holding investment in shares be capitalized? The correct answer is no. Okay, before I proceed on this, one last question. How many of you are waiting to go for lunch break? Sorry, but I still have a little more to go. So the next standard is AS 26, intangible assets. AS 26 deals with the recognition, measurement and disclosure requirements of intangible assets. Before we get into AS 26, let's discuss about the importance of intangible assets in the present day scenario. The most recent example that I can think of is when Walmart acquired Flipkart. Walmart stated that in the acquired Flipkart assets, there was about $5 billion worth of intangibles and $13.6 billion of goodwill. Such is the emerging importance of intangible asset. Hence, it becomes all the more important for all of us future chartered accountants to know the accounting treatment of intangible assets. Hence, this standard is important to study. Let's go. Okay, three important concepts as per AS 26. Identifiability, control, and future economic benefits. Identifiability means an intangible asset should be distinguishable from goodwill and also be capable of being sold, rented, or exchanged independently. Future economic benefits. Future economic benefits can be in terms of increase in revenue or savings in cost or tax. Control means the power to receive future economic benefits or restrict others from use of the asset. When this happened yesterday, I was thinking it shouldn't happen to me, but tech God had other ideas. Recognition criteria for intangible asset. We've all learned this for our exams, so you can tell it with me if you want to. First condition is probable to expect future economic benefits, and two, cost should be measurable reliably. If these conditions are fulfilled, an intangible asset can be recognized under AS 26. One of the key points of AS 26 is the accounting treatment of costs under the research and development phase of an enterprise. So the costs incurred during the research phase are charged as an expense to P&L account. This is because in the research phase, an enterprise cannot guarantee success of a particular project, nor can it talk about the inflow of future economic benefits. Development phase, the costs incurred in the development phase should be capitalized as an intangible asset if and only if 6 conditions are fulfilled. Those 6 conditions are technical feasibility, intention to complete, ability to be used or to be sold, generation of future economic benefits, cost should be measurable reliably, and adequate resources, whether financial or technical, should be available to complete the intangible asset. In any case, if an enterprise is not able to distinguish whether the costs are from research phase or development phase, in such a case, the total expenditure should be treated as a research expenditure and charged as an expense to P&L account. Amortization. Amortization means the writing off the cost of an intangible asset over its useful life. In AS 26, there exists a rebuttable assumption that the useful life of an intangible asset should not exceed 10 years. However, if there is clear evidence presented by the enterprise, then the useful life of an intangible asset can exceed 10 years. I'll demonstrate this with a real life example. This example, the Tata Power Company Limited purchased distribution license for the supply of electricity in some parts of Maharashtra for 25 years. It is expected that there will be demand for significant amount of electricity for 25 years. In this case, the distribution license was acquired for 25 years and there is clear evidence that there is significant demand for 25 years. Hence, in this case, the intangible asset, in this case which is the distribution license, should be amortized over a period of 25 years. My last but most important topic for the day is accounting treatment for goodwill. Self-generated or internally generated goodwill should not be recognized and will never be capitalized. But in case of goodwill arising on amalgamation in the nature of purchase, this is the accounting treatment. As per AS 26, such goodwill will be treated as a finite intangible asset and amortized over 10 years as per the rebuttable presumption. As per Ind AS 38, such goodwill should be treated as an indefinite intangible asset, never be amortized, and be subject to an annual impairment test. With this, I come to an end of my presentation. I wasn't able to complete both these standards fully, but I tried to cover some key points due to the time constraints. Hopefully, I was able to give to you in this presentation something invaluable, indispensable, and intangible. And hopefully, I was able to establish my goodwill right here in front of you on this stage. Thank you. Signing off. This is Apeksha.
Thank you, Apeksha. Now we have Srivatsa GN, working currently as an executive in Bangalore. He is a past president of SICASA, Speakers Forum, Bengaluru, and ex-vice chairman of SICASA, Bengaluru.
We now request Srivatsa GN to take over the session.
Hello, hello. My dear friends, please stay back. ನಮಸ್ಕಾರ ಬೆಂಗಳೂರು. ಇಷ್ಟೇನಾ ನಿಮ್ಮ ಎನರ್ಜಿ? ಊಟ ಕೊಡ್ತಾರೆ ಗೊತ್ತು, ಟೈಮ್ ಆಗಿದೆ ಗೊತ್ತು, 1:45 ಆಗಿದೆ ಗೊತ್ತು, ಎಲ್ರಿಗೂ ಊಟ ಸಿಕ್ಕತ್ತೆ, ನೆನ್ನೆಗಿಂತ ಚೆನ್ನಾಗಿ ಅದ್ ಕೊಡ್ತಾರೆ ಅಂತ ಎಲ್ಲಾರು ಆಶಿಸೋಣ. ಅದ್ರಿಂದ ಟೈಮರ್ ಇನ್ನ ಶುರು ಮಾಡಬೇಡಿ, 1 ನಿಮಿಷ. ಆದ್ರಿಂದ ಈ ಸೆಷನ್ ಶುರು ಮಾಡೋಕ್ಕೂ ಮುಂಚೆ ಎಲ್ಲರೂ ಎವ್ರಿವನ್ ಶುಡ್ ಕ್ಲಾಪ್. ನಿಮ್ಗೆ ಎಷ್ಟಾಗುತ್ತೋ ಅಷ್ಟು ಜೋರಾಗಿ ಚಪ್ಪಾಳೆ ತಟ್ಟಿ. ಎಸ್, ಹೂ, ಕಮ್ ಆನ್, ಸಮ್ ಮೋರ್ ಎನರ್ಜಿ. ದಿಸ್ ಇಸ್ ಬ್ಯಾಂಗ್ಳೂರ್ ಕ್ರೌಡ್. ಇದಕ್ಕೊಂದು ಜೋರ್ ಚಪ್ಪಾಳೆ. Timer, you can set the time now. Ind AS 115. Revenue from contract with customers. When I was searching this, today I'll be covering only 5 points. Where introduction, then 5-step module, something is there, and 1 case study, and then significant differences, and then conclusion. Istike mugisbidtine. I'll end by this. Okay? We'll start. Yes. When I searched what to speak on revenue to give some quote, I got this one quote. We'll read. Entrepreneurs believe that profit is what matters most in a new enterprise. But what matters most is cash flow. Understood? We'll go for next slide. What is introduction? Next. Whenever we start anything in accounting standard or Indian accounting standard, first thing we'll read is objective, scope, definition. Correct? What is objective? It establishes nature, amount, timing and uncertainty of revenue and cash flow. Understood? We'll go next. You all should think why I'm going fast is interesting is there. Avaga I'll slow down. Okay? Don't worry. Now we have scope. In accounting standard and Indian accounting standard, one main thing. We'll read this. Non-contractual income, leases contract, insurance contracts, financial instruments contract, contracts that are not with customers, and one big sentence is there. All these are not applicable. Idur bittu yenidyo adella full applicable. Got it? Next. Definition. Ella definition kodtare. We'll define what is definition. I'll tell. She is beautiful. Now I will tell. She is gorgeous. Which has fancy in it. She is gorgeous. Means simple sentence if we have, for that if you add fancy stuff, that becomes definition. Our institute also wants fancy letters. Okay, first, what is revenue under Ind AS 115? An income arising in the course of ordinary activities of entity. What is income? It increases economic benefits, and it's in the form of inflows and results in increase in equity other than those relating to contributions from equity participants. What is definition of revenue as per AS 9? It's a gross inflow of cash in ordinary course of business arising from sale of goods, rendering services and other income. Why do we need to study all those? Instead, they could have told, I have sold you goods, you are giving money. Enough, no? Next. You would have heard this particular word, Panchashila. Where you have heard this? Anyone? When we were in school, we had political science. You all remember? In that we had Panchashila principles. Remember? Don't ask me what are Panchashila principles. I know only the word Panchashila principle. So we will go with this. Next. What are Panchashila principles? Now, we four who are sitting on the stage we have inducted a company called Money Making Private Limited. In this Money Making Private Limited, we are rendering some goods. So, we have one of our MC member, we are getting in contact with them. That is, identify the contract with the customer. We are selling goods to him. We are getting in contact. This is the first step. When to recognize revenue, you need to first identify the contract with the customer. Next, identify the performance obligations in the contract. What it means, what goods I am selling, I am just letting him know. This is the second step. Then, determine the transaction price. Bargaining. This is not bargaining. We will use fancy word. Negotiation. So, determine the transaction price. What is transaction price? At what price I am selling you? Are you okay with that? If you are not okay, I will reduce some. And then also if he bargains to give me for some amount, then I won't bargain. If it is 10, he will ask 9.5. I will tell 9.75. That is a determination of transaction price. Then allocate the transaction price. For the goods, I will allocate the transaction price. Next is recognize revenue when entity satisfies the obligation. When Money Making Private Limited people sell goods to our MC member, he will accept. That is what is revenue recognition. Panchashila principles. All of you have understood or not? Yes or no? Yes or no? Yes or no? That's superb. Next, case study. This is what is most important for all of us. You all have heard from yesterday, unicorn, startup, something and all you have heard. Yes or no? Decacon. What is decacon? Let us split it. Deca means, corn means popcorn. So, 10 popcorns if you eat, you will be a decacon. Yes or no? Unicorn. One popcorn, if you eat, you will see it as unicorn. That is not the case. Decacorn means where a company has a valuation greater than 10 billion US dollars. We have this one particular company over here. Let me tell in Kannada, then it will be more interesting. Okay. ಯೋಚಿಸು ಮತ್ತು ಕಲಿಯುವ ಕಂಪನಿ. Someone can translate in English, please do. ಯೋಚಿಸು ಮತ್ತು ಕಲಿಯುವ ಕಂಪನಿ. Think and Learn Private Limited. It is also known as Byju's. Big round of applause for her. Hey, ಇಷ್ಟೆಲ್ಲ ಸಾಲಲ್ಲಪ್ಪ, ಇನ್ನ ಜೋರು. Why Byju's was in news? If you have seen the series City of Dreams, there one person will come, is a news channel panelist, come, I want to know the fact. Yes, I want to know truth. And he will shout. Okay, keeping in this, we all should think why this Byju's came into picture recently. What made it to come in the news channels, newspapers? First thing is, I would like to ask a question. What is the ideal timeline for filing the financials under section 137 of Companies Act 2013? Anyone? ಬೇಡ ಸೆಕ್ಷನ್ ಊಟ ಹಸ್ವಾಗ್ತದೆ ನಂಗೆ ಬೇಡ ಅಂತಿದ್ದಾರೆ. Okay, fine, I will only tell. Ideally, you should file it before October. Let the respective years be. What happened in this particular Byju's case is that financial year 2021's financials was filed in October 2022. It should have been filed before October 2021. Why there is a gap of 1 year was the news for news channels. If they get a small pinch, it's great for them. And one more thing, before going further, I would like to give a disclaimer. The names and something which is coming up over here in future is only to make you understand the concept. It's not to hurt anyone's emotions. Clear? Okay. We will see the revenue chart of Byju's. It had few services which it was rendering. Course fee and other services, there are some figures, all are in crores. Streaming services, there are some figures. Sale of edutech products, there are some figures. You can see there is a decrease in trend when compared to 1920 and 2021. Is it or not? Hey, Rappa. Thank you. Next, we'll see the position chart. In financial year 1920, the revenue was 2,189 CR and 2021 it's 2,280. Fine. Expenses 2,870 crore in 1920, 7,027 CR in 2021. And loss from 305 to 4,564. What a whooping loss. Why it happened? We will see. We'll understand this with example. We'll take one particular example. We have one particular person who is diligent, disciplined, and dedicated person who is none other than our Secretary of Sikasa Bangalore, Mr. Monish. He is ready to learn 8th to 10th standard once again. So he is holding his kit already and he has come over here. He went to Byju's to know the fee structure and he'll get admitted. Byju's mentions you are charged 1 lakh for all the 3 years. Is she all right? She's sleeping, I think. Not well? Fine, fine. Take. Wait. Some more interesting is there. We'll pull Monish a bit. $1 lakh for all the 3 years. Okay. When the revenue should be recognized? When the revenue should be recognized? Anyone? let the crowd tell. When the revenue should be recognized? 1 lakh I'm paying now. When the revenue should be recognized? We all are brilliant. Next. What was the company's stand in recognizing revenue? Think you are a company, you don't know what is accounting standard, what is bada company ka standard, that is Indian AS. So, when you think in the stand of a company, you will think, whenever I get revenue, I should recognize at that particular point of time. Is it or not? That's what the case over here. Just a basic one line. It recognizes everything now only. So we will see as per standards in fancy letters how it is done. As per AS9, when should we recognize the revenue for tuition fees? We should recognize over the period of instruction on a straight line basis. You all told correctly. For that, big round of applause. Arey, come on. Now AS9, well, let us keep it aside. We are in Ind AS 115. Yes. As per para 35A of Ind AS 115, it states that an entity transfers control of a good or a service over time and therefore satisfies performance obligation and recognize revenue over time. Here, the Byju's company should have recognized the revenue over time, but it did in time. That was a major problem. If one of the following criteria is satisfied, there are some three, have taken only one which is relevant. The customer simultaneously receives and consumes the benefits provided by the entity's performance as the entity performs. Next, one more part we have, which is bit relevant because this speaks upon deferred revenue scheme. The entity has a present right to payment for the asset. If a customer is presently obliged to pay for an asset, then that may indicate that the customer has obtained the ability to direct the use of and obtain substantially all of the remaining benefits from the asset in exchange. You all didn't understand, I don't know. I also didn't understand when I read for first time. It is a deferred revenue scheme where you need to defer the revenue. See, Maunesh is taking 8th to 10th class. He has paid the fees already, but he has completed his 8th standard portions in this particular year, that is 2023. So ideally, the company should have recognized 1 lakh divided by 3, what the amount I get at 2023 March. But it has recognized whole 1 lakh. That's the main chunk over here. Therefore, the deferred revenue of Byju's amounted to 1,156.27 CR, where it has deferred. This particular thing made a company to be in use overall. Hope you all understood the deferred revenue concept, why this case study has come up in news. Yes or no? We have some significant differences. Before that, to get this particular deferred revenue amount, the auditors who were Deloitte took 3,000 to 3,500 hours to get to this particular conclusion. See, we CAs, or future CAs, CA, complete assurance. Though our auditing standards and all tell reasonable assurance, we do complete assurance from our end, right? So that's the reason they have made this particular thing to come over here. Significant differences. There are some in AS 115 and AS 7 and 9. What are the differences? Is that in the framework, some specific core principles are basically in AS is detailed, AS 9 is cursory level. We can take it. So we specify more core principles here. That particular thing is not there, and guidelines, elements, everything is there and not there. We all know it. Basically, any in-depth analysis can be done. We have entertainment. See. In-depth analysis can be made in Ind AS. Next. Baiju Ravindran, who is the director of Think and Learn Private Limited, was provided with this interview. He mentioned to the press that we have not made any fraud. And also auditors were not warranting to resign from the contract. But we have learned the hardship, how difficult it will be when it comes to revenue recognition. So now everything has come to set right. So everything is all right now. This is just a news for us to understand. If we miss out something in accounting standards, what will happen? the serious repercussions. Revenue is a bread and butter for all of us. It's a source of sustainability. We can't be without revenue. Honest recognition depicts honest situation of the entity in its growth and prosperity, and recognizing revenue is obligatory. One last thing, my friends. Life is like a seesaw game. The way we manage it, what matters. Life of a student is also like a seesaw game. The way we balance our balance sheet in the exam is most important. In the same way, we all are provided with an opportunity and we need to utilize it very, very well. We should, if we leave somewhere, it will definitely lead to serious repercussions. If all knows one of my quote, which is a bit famous over here now, it's not taking the proud, everyone knows. So if you can join your hands together with me and tell the quote, change the slide, change the slide. Tell the quote, let's tell together. Opportunities are like ice creams, taste it before it melts. Signing off, Srivatsajian. Thank you.
Thank you, Shivatsa, for that energetic session.
We now have with us the third speaker of the session, Mr. Shahin Shah Khan, who is a CA finalist pursuing his articleship in the field of internal audit. He is an out-of-the-box thinker, a guitarist, and most importantly, a cinephile. I now request Mr. Shahin Shah to take over the session.
Special instructions to Monish, my dear friend. One click at a time, please. Because I don't want the suspense to get spoiled. Quote. A famous philosopher whose photo is printed on every $100 once said, "Tell me and I forget. Teach me, I may remember. But involve me and I learn." A very good afternoon to the honorable dignitaries and to my fellow future chartered accountants. Similarly, I want all of you to keep pausing for 9 seconds. And the time starts now. 1, 2, 3, 4, 5, 6, 7, 8, 9. Done. Thank you. Now, the first 3 seconds of applause were for all the paper presenters and the Shark Tank competition participants, and that was for the 3 seconds. The remaining 6 seconds were for the audience. Because for you being such a committed and ardent audience and energetic audience. Come on, guys. See, I have a bet with Monish that I'll be paying him 500 if he'll be paying me 500 if I win that we've got the most energetic audience ever. Your benefit is I'll finish off the paper presentation in 15 minutes and you can go for lunch. Now, let me introduce myself. I'm Shahin Shah and I'll be presenting on Accounting Standard 10. Monish? Now, for all those people who are putting their heads down towards your phone screens, trust me, this guy over here has lined up a fun activity ahead. But I want you guys to remember and not just listen what I'm saying. The objective of Accounting Standard 10, Property, Plant and Equipment, prescribes accounting treatment for property, plant and equipment. Do you see a loop? The property, plant and equipment prescribing accounting treatment for property, plant and equipment. Trust me, the first time I read this, I questioned myself. I'm either high on something or I'm not reading the standard properly. Before you conclude, it was fortunately the second one, I was not reading the standard properly. Moving on, one second. Yeah. Accounting standard property rent. But the question is, what is property, plant and equipment? The property, plant and equipment, at the standard states that any tangible asset to be considered as a property, plant and equipment should satisfy two conditions. How many conditions? How many conditions? Thank you. Monish? The first condition being it is held for production or supply of goods or services, or for rental purpose, or for administrative purpose. And the second condition is it is expected to be used for the period more than 12 months. With me? Perfect. Hold on. Now, since I'm looking smart and I've got beard, I want to ask a question. So can any tangible asset who's satisfying the conditions of two conditions of PPE be accounted in property, plant and equipment? Alpha? I repeat the question. Can any tangible asset that satisfies the two conditions of PPE be accounted in accountant standard 10? Beta? Gamma? Well, yes, the answer is yes, but there are two cases wherein AS10 is not applicable at all. The first, done, keep it there. The first, okay, there's a technical problem from my end wherein you can see it, but kindly ignore that. First one being any tangible asset whose accounting treatment is prescribed by another accounting standard, such as AS10. To any tangible asset whose accounting treatment is prescribed by another accounting standard will not be applicable under AS10. Now, talking about accounting standard 19, leases. To any tangible asset that is procured for under lease, the accounting standards requires the enterprise to evaluate its recognition criteria under AS19. However, it is to be noted that the other aspects of accounting treatment, such as depreciation, measurement, revaluation, will be prescribed by accounting standard 10. Moving on to the Ind AS 41, which prescribes accounting treatment for agricultural produce, that is biological assets other than bearer plants. How many guys know what bearer plant is? Well, I don't know, we'll go on later on. Well, the second condition, the second aspect wherein accounting standard is not applicable is wasting assets, including mineral rights, exploration and extraction of mineral oil, natural gas, and similar non-regenerating assets. Now, let's have the fun activity. You guys ready? Yes. Trust me, you guys gonna enjoy it. Are you guys ready? Yes. Monish? One at a time. Okay, before that, the bearer plants. So what is bearer plants? I'll just quickly go. Bearer plant is a plant that is used in production or supply of agriculture produce and is expected to bear a produce for more than 12 months and has remote likelihood of being sold as an agricultural produce. Let's take two examples of coconut tree and a banana tree. Banana tree, yeah. So coconut, the first condition that is it is used for the production of supply of agriculture produce is both the trees satisfied. One is the tender coconuts, another is banana. Then second is it is expected to produce for more than 12 months. The lifespan of coconut tree is around 25 years and lifespan of banana tree is 1.5 years to 2 years. The third condition, however, the remote likelihood of being sold as an agriculture produce is not gonna, the banana tree does not satisfy it because once the tenure of tree gets over, they sell it as a agriculture produce. The leaves are given as a food purpose and then the branches are being cut and used for agriculture produce too. Now, coming back to the fun activity, Monish. Now, let me ask you a question. Since I'm smart and I've got beard, let me ask a question. There's this famous person who is a CEO and a businessman who's been famous since April 2022. Any guesses? Adani, any guesses? Huh? Elon Musk? Anyone? Okay. Keep your suggestions temporarily, Monish. And ladies and gentlemen, introducing the CEO and businessman. Yes. What's his name? Yes, you're right. That's what. The fun activity is there. Hold on. Now, he is a CEO and a businessman of Narachi Limestone Corporation Limited, and he's got a lot of funds, so he plans to invest in fixed assets in order to expand his business. So, he bought 4 assets. The first one being a town called Narachi for mining of gold. I want you guys to think about it, whether it is can be accounted in AS10. The second asset being a building for 99 years of lease for administrative purpose. Keep it. Third, being a bike for convenience purpose from the admin office to mining fields. And the fourth, read out. Read out. Yes, a Kalashnikov for the purpose of protection of the other PPEs. Are you guys ready for evaluating yourself? Guys, come on, lunch break is there in half an hour. 15 minutes. Are you guys ready? Monish? Now, let's quickly rush to the illustration. That is, a town called Narachi for a mining of gold do satisfy the 2 conditions of PPE, but AS10 is not applicable because it's a wasting asset. Second, being a building of 99 years of lease for administrative purpose does satisfy the conditions of PPE, but is not applicable under AS10, but it will be applicable in AS19. The third and the fourth being a bike for convenience purpose does satisfy the PPE conditions as well as accounting standard 10, so it will be accounted in AS10. The fourth being a Kalashnikov for the purpose of protection of other property, plant and equipment will be given once you guys come meet during the lunchtime. Now, let's move on to another second aspect of property, plant and equipment being a measurement of property, plant and equipment. Measurement of property, plant and equipment on a general term means what is the cost that I can capitalize into an asset. Now, that measurement of property, plant and equipment occurs at 2 points of time. 1, at the time of recognition, and 2, subsequently after recognition. Now, since I am not going to cover in subsequently about that, let me give a glimpse of it. Subsequently after recognition depends upon the accounting policy the enterprise adopts and applies in terms of recognition of measurement of the asset, be it a cost model or a revaluation model, which due to time constraints I will not be covering in my paper. But I'll be covering about the measurement of PP at the time of recognition. The standard says that an item of a property, plant and equipment qualifies for a recognition should be measured at cost. The cost stated here is kind of open-ended statement, because can I include any cost to my property, plant and equipment? No. So the standard further says the cost of an item of PPE includes and excludes few. So let's talk about the include. The include part is purchase price, any directly attributable cost, TWE and decommissioning and similar liabilities. So let's talk about one by one. Purchase price is the actual price that you're paying to a vendor to procure the property, plant and equipment, but it will not include any refundable purchase taxes such as GST. Second, being a directly attributable cost, so any cost that is being incurred for bringing the asset to a desired location and condition will be included into a condition that is such that it is capable of being operated as intended by the management will be included. However, there's one cost that cannot be included in the PPE, which is cost of relocation or rearranging the operations of the enterprise. The third being the decommissioning, restoration and similar liability is the initial estimate of the enterprise about how the about how much cost they might be incurring in terms of dismantling and disassembling the asset from the premises. Now, the cost of property equipment that are excluded from the measurement will be inauguration cost, cost of introducing a new product, cost of conducting a business at a new location, and administration costs. Now, illustration for a measurement. See, I was smart when it comes to the recognition, but ICI has got really good examples when it comes to that. So I've taken a screenshot of ICI study material. Yes, the entity has an existing shareholder freehold property, factory property, which it intends to knock down and redevelop. During the redevelopment period, the company will move its production to a facility to another temporary site, for which it incurred few incremental costs, such as setup cost of 5 lakh to install the machinery at a new location, rent of 15 lakhs for that temporary location, removal cost of 3 lakhs to transport that machine from a existing location to a temporary location, free of 60,000 paid to an architecture for the new building plan, and the labor charges of 25 lakh paid for a manpower used for the construction of a new building. Now, let's not consume your time. So let me take the first three costs incurred by the company. That is setup cost, rent for the temporary facility, and removal cost will not be capitalized to the new building, because that is a cost of relocation or rearranging the operations of the company. However, the fourth and fifth cost of that being architecture fee and labor charges for construction of the asset are the directly attributable cost, and hence will be included in the cost of property, plant and equipment. Now, let's talk about the last aspect of property, plant and equipment, being depreciation. Depreciation is something which we've been learning from 11th, 12th, CPTs, foundation and intermediate, right? Anyone can tell me what the definition of depreciation is? A little louder. Well, the definition, as my friend Srivatsa told, is a fancy sentences, right? To the standard states, depreciation is a systematic allocation of depreciable amount of an asset over its useful life. Simple. The value of the depreciable amount of an asset is being systematically allocated to the useful life of the asset. That brings into another question: what is depreciable amount? Now, depreciation amount is the cost of the asset minus accumulated depreciation that has been accumulated during the useful life of the asset. Now, once the depreciation is considered, there is a question of commencement. When do we start the depreciating an asset and when do we stop depreciating an asset? The depreciation of an asset commences once the asset is available for use, and that is when its location and the condition necessary for it to be capable of operating as intended by the management is done. The asset starts getting depreciated. The cessation of depreciation is to be charged once the residual value exceeds the depreciable amount. Done. Methods of depreciation. The standard states 3 methods of depreciation, one being straight line method, another being diminishing balance method, and the last being unit of production method. Now, standard states 3, but how does the which one should a company adopt? The standard says that the method of depreciation should reflect the company's consumption of future economic benefits of the asset. Now, that was the concepts covered. One is objective of AS10, recognition of property of plant and equipment under AS10, measurement of property, plant and equipment at the time of recognition, and depreciation of PP. This is Shahan Shah signing off. Thank you. I'm so sorry.
Thank you, Shahan Shah.
May we now request CA Vinay Pai to conclude the session with his insights.
Let me congratulate the three speakers for a job well done. Accounting, financial reporting, application of accounting standards requires such an approach. We first had Apeksha doing a very methodical, complete coverage of the standard. And then Vatsa came in with an interesting analytical case study. And then finally, Shainsha, got in some creative aspect apart from coverage of the standard. Well, I'm not saying do creative accounting, but we have to be creative in every aspect, including accounting. So if you see, the terms which I have used, it is more like the entire gamut of things or elements that need to come when you apply accounting standards or indulge in financial reporting. Those of you, I'll just take 2-3 minutes. The people, those who are sitting here, I'm sure either you are fasting, had an early lunch. That's an option, yeah? Or waiting, yeah, okay. Out of courtesy. Respect, yeah. So, in conclusion, I would like to, there's all of us here are students, that includes me also. When I was your age, I studied only 15 accounting standards and none of them were compulsory either for companies or even from the examination point. I can say you could skip that part because it was a very small part. Today it is no longer so. For instance, you could say, I would be dealing something in international or specializing in, say, international tax. There are quite a few developments in that space also which are closely interlinked with financial reporting. Let me just take a quick example. The OECD has come out with the Pillar 2, which is the base erosion rules, anti-base evasion rules, where there would be a global minimum tax of 15% on a large M&E, wherever its effective tax rate in any jurisdiction that it operates, in the form of either a subsidiary or a permanent establishment, wherever it falls short of 15%, the ETR falls short of 15%, one has to end up paying 15% as the minimum tax. And one of the starting points for that computation, like everything in taxation, is what is termed as fit for consolidation accounts. And a few accounting frameworks like US GAAP, IFRS, and including the Ind AS in India, are acceptable for that purpose. Point number 2, 3 points only. Point number 2, while you study accounting and while you do the application, please get into the specifics of bare standard that makes the understanding and the application easier. Understand the principle behind the standard. Why do we need to do a particular treatment? For example, Apeksha mentioned about goodwill and she covered that. The accounting world, over the last 60-70 years, has grappled with, or rather experimented with 7 different approaches to the day 2, which is the subsequent measurement of goodwill. And what we see today in AS, for example, is one variant where there is a compulsory amortization with a rebuttable presumption, and under Ind AS, it's treated as an indefinite life intangible subject to annual impairment testing. Why am I saying this? A lot of developments, and we go back to what was there once upon a time finally. The UK Endorsement Board, for example, has recommended an approach which is in line with what is there under AS. And very recently, just 2 weeks back, the International Accounting Standard Board, which influences our Ind AS also, deliberated upon for a considerable period, and then they have now voted for saying that we will follow an impairment approach only to goodwill, no amortization. Last point, when I say get into specifics of bare standards, and of course I'm not picking holes in your presentation, Shahin, because I see that happening even in the annual reports of listed companies. 5-step model. In days you study and you apply it, there is a 5-step model, right? Yes or no? Please tell me, please show me where is it in the bare standard. When we actually apply technical requirements and use them in notes to accounts, or we can use it in our education purposes, but when we actually apply it, a 5-step model is not something like a business model which is articulated in a standard per se. It's not like a methodology of accounting. Of course, there's nothing wrong in that particular usage, but I would be happy if someone shows me going through the bare standard or the application guidance which accompanies it, where is a mention of a 5-step model. It's not there in the standard. So let me conclude with just one last slide, and if one of you, it's more like a show off, one of you can take a pic with me also. This is one of my latest cartoons in the Bombay Chartered Accountant Journal, which I thought would be apt in the context of balancing the balance sheet. Okay? So let me conclude by saying that I have been to many seminars by our institute, both as a participant, speaker, chairman, whatever. And there have been many occasions where there have been discussions, themes on the profession, the future, so on and so forth. But at this vantage point, standing here, I can say today I saw the future of the accounting profession before me. Let me tell you, most or all of you will be entrepreneurs, CEOs, CFOs, leadership positions, regulators. I'm not saying this to end this on a motivational note, because this is what our institute has been specializing in for all these years. And let me also say, I am a rank holder in the CA final. No, nothing for that. What I want to say is, in the financial reporting paper, I just got 40 marks. The difference between failure and getting a rank was 1 mark. What is the point that I'm trying to put across? I didn't like that subject. I was not good at that subject. The marks also reflect it. But I have made a living out of it because the institute provided me every opportunity, the learning, the guidance, and how to even switch on from, let's say, AS to IND-AS. With that note, I conclude and I wish you all the very best. Thank you.
It was a very interesting and informative session indeed. Thank you so much, sir.
We would now request Chandra sir to give the momentum to the session chairman. Can we have the mementos for the student speakers, please? Requesting Chandra sir to give the momentum.
We now request Mr. Lavish to deliver vote of thanks, thereby winding up this session.
Respected dignitaries on and off the dais, I am delighted to have this opportunity to propose vote of thanks. I would like to thank CA Vinay Pai, chairman of the session, and the paper presenters for taking an extra effort and helping us understand the concepts better. Thank you.